So we are talking about admission of partners. Can you tell me what do you understand by the term admission of partners?
Yes, admission of partners basically means when a new partner is admitted to a business, something like that.
When a new partner is admitted to the business, it is called admission of partnership firm. So when we talk about admission of partners, say A and B were already running a business. Okay?
Yes,
A and B were already running a business and they decide to admit another partner C into the business. Okay? So A and B will close their old business and A, B, and C will start a new business. Okay?
yes,
So in this case, I would say A and B will be called old partners
yes,
and C will be called the incoming partner and A, B and C together will be called the new partners. Can you tell me the
yes.
reason why do the old partners want to have a new partner coming into the business?
Uh, so like, say,
Hmm. Why does anybody want somebody else to come into their business?
so like they can have more revenue, the help of the new partner,
So
more
does
profit.
this partner bring in revenue?
No,
If I admit a new partner, will he bring me revenue?
no, no.
No. So why do we want somebody to come into the business? We want a new partner to come into the business because somebody else comes into a business, the main reason would be he will bring in extra capital. If this person is bringing in extra capital, that means I have more money to do the business. If
Yes,
a new partner comes in, he might have his own set of skills. So he can
yeah,
bring in expertized knowledge. Okay. And also,
yes,
when the new partner comes in, he gives the old partner some amount for the efforts that they have put in the previous years to build the business. Okay. So I say if A and B were old partners, yeah, and they
yes,
decide to bring in C into the business. So, C, whenever he is going to come into the business, he will always bring two things along with him. He will bring cash for capital. Okay. So,
yes,
C, that is the incoming partner, will always bring in some money towards his capital and he will also compensate the old partners for building up the business. What does this mean?
yes,
This means that when C is coming into the business, he is going to pay A and B for the goodwill.
okay,
He will give two things to the firm. He is going to give new capital, extra money. Okay.
yes,
And second thing, he will be giving amount for goodwill to the old partners in the ratio in which they sacrifice their profit. Because when A and B were doing business before, say they were earning half and half, equal amounts.
yeah,
Okay. But if the new partner comes in, the old partner have to sacrifice something.
Yes.
Okay, so C will give them some amount towards goodwill because they are sacrificing their profit share.
Yes.
With me? So what am I
Yes, ma'am.
trying to tell you? That whenever a new partner comes in, he brings in a lot of things along with himself. The main thing that we are talking about in terms of accounting is that he is going to give money for capital, he is going to give money for goodwill,
Yes.
okay, or something for goodwill. He's going to give something for capital and something for goodwill. Are you with me?
Yes, yes.
So let's talk about what happens, okay? What happens when I bring in a new partner, or I could say effects of admission of a new partner. So when a new partner comes into the business, the old partnership was between A and B, and the new partnership will be for A, B, and C. Are you with me?
Yes.
So the old partnership will come to an end, okay, and the new partnership will come to existence. So
Okay.
when I admit a new partner, old partnership will end and a new partnership will come in.
Partnership will come. Yeah.
Okay. Then what happens is initially whatever profit was happening, it was shared by only the old partners. Are you
Yes.
with me? But
Yes,
when a
ma'am.
new partner comes in, their combined share of profits is going to reduce. Because now the profit will have to be shared between three people rather than two people.
Yeah.
Yeah. So the old partner's profit will reduce. Okay. So when the old partner's profit is reducing, that means we are saying that the old partners will sacrifice their share.
Yeah.
Are you with me?
Yes.
Incoming partner will bring in capital.
Yeah.
Yeah. Incoming partner will give some money to the old partners for their sacrifice.
Yes.
Okay. So now, if I am telling that the incoming partner is going to give so much, so can the incoming partner demand something?
Yeah, they can.
What will they demand?
Um, well, I don't
Tell
know.
me one thing, let's say one thing. A new partner is coming in. Okay. A
Yes.
new partner is coming into the business. So if the new partner is coming into the business, what is happening?
When a new partner comes into the business, he brings his own capital and or cash.
Bring a capital. Okay, he will bring in capital. Second thing, what is going to happen is that he is going to compensate
Compensate.
old partners for sacrificing their
Yeah.
profit.
Yes.
Okay, so that means this is giving adjustment for. So that means he is going to give them money or whatever form
Yeah. Goodwill.
for goodwill. So this is adjustment of goodwill will happen.
Okay.
Tell me, will the profit sharing ratio change?
Yes, it will.
Okay, the profit sharing ratio will change. So when the profit sharing ratio changes, what happens?
Change in structure.
So there is a profit sharing ratio is going to change. That means there is a change in structure. So if there is a change in structure, then in that case, what will happen? There is
See,
a change in
uh,
structure. So whenever there is a
y-
change in structure, what happens? Asset and liabilities are revalued.
yeah,
Revaluation account is prepared.
yes.
Undistributed profits and losses
Profits
are
and
distributed.
losses.
Undistributed profits and losses will be distributed. Undistributed profits will go on which side?
Credit side.
Partner's capital account. If
Yes.
this is my partner's capital account, undistributed profits will be distributed on the credit side.
Credit side.
Undistributed losses
And the debit side.
on the debit side. Revaluation profit will come where?
Credit.
Revaluation profit will come here. Revaluation losses
Debt.
will come
Yeah.
here. So there will be a change in the structure. Assets and liabilities will be revalued. There will be adjustments for undistributed profits and losses. And what else?
Yes.
The adjustments for goodwill.
Yeah. Adjustment for goodwill.
Now
Sorry.
remember, goodwill will be brought by the new partner,
Yes.
but it will be given to whom?
The old partners.
Given to old partners. In which ratio?
Old ratio.
By old ratio. Usually old ratio and sacrificing ratio,
Okay. Yeah.
but it will be given to the old partners in the ratio in which their old partners are sacrificing.
Mm.
Because the old partners are going to sacrifice their share of profits. Yeah. So
Yes.
goodwill
Yeah.
will be brought in by the new partner, but it will be given to the old partners in which ratio?
Old ratio.
It will be
I
given
mean,
to
sorry.
partners in the sacrificing ratio,
Sacrificing ratio.
in which they sacrifice. Are you with me?
Yes, sir.
So whenever there is admission of partners, these are the things that we necessarily do. Okay, that we have to do. What are the adjustments that we do at the time of admission of partner? We will calculate new ratio,
New profit sharing.
sacrificing ratio.
Yeah.
Okay, how do you get new ratio?
Uh, you get new
Old ratio,
minus new ratio.
we are calculating the new ratio, right?
Okay. Yeah.
And B was sharing profits and losses half and half. Now they are going to
Okay.
sacrifice something, right?
Yeah.
Will sacrifice something, they will sacrifice something. So from the old ratio, if you minus the sacrificing ratio, you will get the new ratio.
Okay.
Are you with me?
Yes, sir.
So adjustments that is required at the time of admission is what? First thing, you will have to calculate the new ratio. You will have to calculate the what?
Sacrificing. No, the new ratio.
Have to calculate the new ratio. You have to calculate the sacrificing ratio. Okay. Now understand one thing. Say this is the firm.
Yeah.
Okay. I say this is the firm, and initially A and B, A and B used to share profits
We
and losses equally.
equally.
So this is their old ratio.
Yes.
So they were having a big share of the profits. Are you with me?
Yes.
Now what happens is they decide to admit C in the firm.
Yes.
Okay, whom do they decide to admit C in the firm?
C.
Now, if they are admitting C in the firm, A is sacrificing this much. B is
Yes.
sacrificing this
Okay.
much. and this share is being given to C.
C.
Are you with me? So from
Yes.
A, C is going to get this much, and from B,
Yes.
C is going to get this much. So C is going to get his share partly from A and partly from B.
Yes.
So C
That's
will
totally right.
give A and B for goodwill, for sacrificing so much, for getting C in. So C will give them goodwill in which ratio?
Sacrifice.
Sacrificing ratio. Very good. Now tell me, if I want to calculate the new ratio for C, if I want to
Yes.
calculate
Yeah,
new ratio
okay.
for A, how will I calculate? This was the old ratio.
Yeah, minus sacrificing ratio.
This is the sacrificing ratio. So if I want to calculate the new ratio for A, it will be old ratio minus what?
Sacrificing ratio.
So the formula for calculating, so A, B and C become equal now. Okay. So formula for
Yes.
calculating new ratio. What is the formula for calculating new ratio? Old
Yeah,
ratio,
old ratio minus sacrificing ratio.
old ratio minus sacrificing ratio. And what is the formula for calculating sacrificing or gain ratio?
Old ratio minus new ratio.
The formula for calculating sacrificing or gain ratio will be old ratio
Yes. New ratio.
and new ratio. If the answer is positive, then
And it's gain. I mean, no, it's sacrifice.
if the answer is positive, then it is
No, it's sacrifice.
sacrifice. If the answer is negative, then it is.
Yeah.
Are you
Yes.
with me?
Yes, sir.
So what happens is, whenever there is admission of partnership, you have to do five things compulsorily. First thing, you will calculate the new ratio and sacrificing ratio.
Yes.
Then you will do adjustment for goodwill.
Yes.
That means you're going to give goodwill to the old partners in which ratio?
In
Goodwill will be given to
sacrificing.
old partners in which ratio?
Sacrificing ratio.
So it will be given to old partners in sacrificing ratio. Then what will you do?
Adjustment for profit and loss.
Then you will do
From
adjustment
reval.
for goodwill. Then what will you do?
Yes.
No, sorry, you will do revaluation of assets and liabilities. What will you do?
Yes.
Revaluation.
Revaluation of assets and liabilities.
How do you do revaluation of assets and liabilities? Which account do you prepare?
Revaluation account.
In revaluation account, what do you do?
There'll be an asset side and liability side.
Whatever good thing happens over here
Yeah.
comes on the credit.
Credit.
Whatever bad thing happens, it comes on the debit. Yeah?
Yes.
If assets are revalued upwards, if assets are
Assets.
revalued
Yeah.
upwards, what do you
Then
do?
it will go to the good side. Liability.
So assets
Asset side.
up and liabilities down would come here.
Down. Yeah.
Assets down and liabilities up would come here. Unrecorded liabilities will come here.
Yes.
Unrecorded assets would come here.
Yes.
Revaluation expenses would come here, any other expenses. And then if you get
Yes.
a balancing figure on the debit side, it will be a revaluation profit.
Yes.
So this revaluation profit would come here and it would go where?
Partners capital account. Debit, credit side.
credit side. And if you have a revaluation loss, where will it go?
Partners capital account, debit side.
It will go to partners capital account debit side. So again, let's recall. When there is an admission of new partners, you have to do 5 things. First thing,
Calculation of new profit and sacrificing.
then
Adjustment of goodwill.
this goodwill will be given to whom?
The old partners
In which ratio?
in sacrificing ratio.
So this goodwill will be given to the old partners in the sacrificing ratio. Okay, then
Yes. Adjustment for profit and loss from revaluation of
you
assets and
take
liabilities.
which account? Revaluation account,
Revaluation account.
and give
Yes.
do the revaluation profit or loss and adjust it towards partners capital. Then
Yes. Adjustment for cumulative profits, reserves and losses.
undistributed profits will go to
Undistributed profits and losses.
capital account. Which side?
Yeah.
Undistributed
It's
profits will go to
profits,
partners capital account. Credit
credit
side,
side.
undistributed losses over here.
Yes.
You know how to do adjustment for workmen compensation fund, investment fluctuation reserve. We did it in change
Yes.
of PSR, correct?
Yes.
Okay. Then what else? Employment provident fund. Remember this. It will never be distributed.
Okay.
And then after that, if there is
Adjustment for capital.
capital in the new profit sharing ratio, then how do you do?
Yeah.
You find the adjusted capital.
Yes.
You do.
And the adjusting capital.
So if you have to do adjustment of capital in the new profit sharing ratio, then what you do, you will find adjusted capital.
Yes.
How do you find adjusted capital?
Uh,
You will do the
how do we
whole,
find it? Just
you will do the whole sum, goodwill adjustments, undistributed profits, undistributed losses, revaluation profit, revaluation loss, everything will
commission
be.
losses.
Okay.
Yes.
After you do everything, how do you find adjusted capital? You do the total of credit.
Total of credit. Yeah.
You will do the total of the credit side, say A, B, and C, and this is the total. I am looking at this column. Okay.
Yes.
Minus whatever is the total of debit, you will do. I'm looking at
Okay.
this.
Yeah.
Say this is 100,000 and this is 30,000. So the new capital will become how much?
70,000.
It will be 70,000. This 70,000 will become what? The closing
The
capital.
closing capital.
If this 70,000 is the closing capital, then this will be the balance closed down on the partner's
Yeah.
capital account, debit side, in
Debit
which
side.
in new ratio.
New ratio.
Okay. And then after you do this, you prepare the new balance sheet. Are you with me?
Yes.
So when you're talking about adjustments required at the time of partnership, 5 things. Tell me what?
Calculation of new profit sharing ratio and sacrificing ratio. Then adjustment for goodwill, for old partners and sacrificing ratio. Adjustment for profit and loss from revaluation of assets and liabilities. Adjustment for accumulated profits and losses. Workman compensation reserve, investment fluctuation reserve, and adjustment for capital.
Okay, fine. So you'll find the new ratio, sacrificing ratio. Distribute the
Yeah.
goodwill among the old partners in which ratio? Sacrificing
Old
ratio,
sacrificing ratio.
and liabilities. Distribute the
Yes.
undistributed profits and losses. Okay. And then if they tell you that the new capital, the closing capital should be in the new profit sharing ratio, then you will find the adjusted capital. Adjusted capital is
Yes.
found how total of credit minus the
Uh,
total of
just
debit.
Neb.
Then you
Yeah.
get the closing capital, that will be your balance closed down, that will appear on whatever the debit side of the partner's capital account in the new ratio. So these are the steps that is required for admission. Are you with me?
Yes, ma'am.
Okay, fine. So these are the steps. Now we will go step by step. First, calculation of the new ratio and the sacrificing ratio. So I'll close this
Yes.
video. For the next video, we are going to do new ratio and sacrificing ratio.